This week, the Fed is expected to cut interest rates by 25 basis points. This should be good for the market. Lower interest rates are good, right? Why do I think this could be a sell the news event? There's an 89% chance that the Fed is going to cut interest rates this week. It's widely expected. We're going to take a look at that in just a second. My picks have been really good, and if you've been trading them, you should have been making some pretty decent money. And I don't just give you the picks. I explain the rationale behind each trade. I want to teach you how to do this. I want to teach as many people how to do this as possible. When you like my videos, when you subscribe to my YouTube channel, when you comment, it helps drive more traffic to the channel. So for those of you who have done so, thank you so much. I really appreciate it. If you haven't, please subscribe to my YouTube channel. So why do I think this FOMC statement could have a sell the news effect? Well, let's take a look at what's happened the last couple of times that the Fed has lowered interest rates. In September, again, it was widely anticipated that they were going to cut. Now, this was the first rate cut in quite a while back in September. In October, there was also an 85% probability that they were going to cut. So let's take a look at the price action heading into those two events. So here we've got September 17th. That was the last announcement. And you can see, what did the market do heading into that FOMC statement? It rallied. And then a couple days after the statement, the air got let out of the balloon and we saw a little bit of a market pullback, a dip right in here. In October 31st, this is where the FOMC statement came out. What happened before? The market rallied into that event. Highly anticipated rate cut. What happened afterwards? We got a nice pullback. And this pullback was actually fairly deep. Deeper than the ones that we've seen recently. That's a sign that the market trend could be weakening. So what is happening right now? Well, we got this bounce off of the low when we tested the 100-day moving average. And you can see how we've gradually floated higher, but the market is starting to run out of steam here. I believe that Monday, Tuesday, maybe even early Wednesday, we could see the market try to get back up to this high, but I don't believe that we're going to be able to punch through. And you can see Friday, we were within striking distance of the all-time high. You can see by that long wick right here, but the market got spanked down. Bearish hammer. Market closed near its low of the day. So there is some resistance up there. We've also seen a marginal new high. That's another warning sign that the trend might be getting a little tired here. I feel that there's a greater chance that we could see selling after the FOMC statement just because of what's happened in the past and the fact that the market is struggling to advance. The other problem that we have right now is that even with the Fed cutting interest rates, we're starting to see long-term bond yields go up. Bonds down, yields up. And look at what TLT did last Friday. It broke below the 100-day and 200-day moving averages. Why are longer-term yields going up when the Fed is easing? One of the big reasons is because two of our largest sovereign debt holders, our two largest, in fact, Japan and China, they've been selling U.S. Treasuries. And so that is putting downward pressure on bonds, and that is putting upward pressure on yields. We've got $37 trillion, $38 trillion in debt. Who's going to be buying our debt in the future if our largest bondholders are net sellers? That's a good question. Our average bond duration is about 3.5 years. That means that we have to refinance $9 or $10 trillion every year. Well, if the demand for our bonds is drying up, it could mean that longer-term yields are going to stay elevated, even though the Fed is cutting interest rates. So it's not a good combination. So if we take a look at what the market did this last week, there were some economic releases, but there weren't many of them. And the government shutdown is still causing a lag in a lot of the data points. So we did get ADP came out, and they showed that there were 32,000 job losses in the private sector during the month of November. That is pretty dang dire, because now we're in negative territory, and there's been more weight put on ADP because we still don't have the BLS. We should have had a jobs report last Friday. We didn't, again, because of the government shutdown. Heading into September, we started to see some weakness on the job front. What happened in October and November? We have no idea. The Fed, they don't have any idea either going into the FOMC statement next week, and that might be one of the reasons that they are going to err on the side of caution and cut interest rates. But mind you, when that statement comes out, and this is another reason that I think that we might see a little bit of a sell-off after the FOMC statement, we got the FOMC minutes last week. When they came out, we learned that half of the Fed officials didn't even favor the October rate cut, and half of them did not feel that another interest rate cut in December was warranted. I believe that when that statement comes out, we could actually see some pretty hawkish rhetoric. Yeah, we're going to cut in December, but don't expect another rate cut in January. We're kind of done for a while now. We need to see how everything plays out and where the economic data points come in. Be another reason for the market to sell off. Oh, gee, this is going to be it for a while? Market's addicted to easy money. You've got a job scene that's starting to deteriorate, and you've got a relatively hawkish Fed. That's not a good combination. We had some other economic releases. ISM manufacturing was in contraction territory, a little bit better than what it was in October, but still in contraction territory. I think about 48.6 is where the number came in. ISM services is actually a little bit more important because 80% of our economy is based on the service sector. There we saw it come in at 52.8. That was a pretty decent number. We also had initial jobless claims came in at 191,000. That's a low number. Again, I don't trust any of the BLS numbers, Bureau of Labor Statistics. They've been wrong all year. And now we've had a 2-month reprieve. They're still trying to play catch up. So I don't know where these numbers are coming from. I do trust ADP because they actually process payrolls. They know how many checks they cut in the last month. Challenger Grain Christmas. They're another private company that does surveys, planned layoffs. They came out last week and they said that for the first 11 months of 2025 compared to the first 11 months of 2024, there are 54% more planned layoffs by companies. This is a survey, so it's very current. That is a huge number. And they've said that employment conditions have not been this weak since the pandemic in 2020. So we've got lots of negative influences. The macro backdrop is fairly soft right now. And what's keeping the market afloat is the interest rate cuts and the Fed and seasonal strength. I believe that's going to continue. We don't have a lot of economic news next week, so the complete focus is going to be on the FOMC statement. So Pete, with all of this bearish news, why are you still neutral to slightly bullish? Why aren't you bearish? Well, because if I were just looking at the headlines, I could have been bearish here, and losing my ass the whole way up. In fact, a lot of people have had difficulty embracing this rally, trading this rally, making money off of this rally. I've been able to do so consistently with the strategy that I've been showing you week in and week out. And so I'm going to stick to that strategy. If I need to hedge, I'll hedge. And I showed you exactly how to do that. I've got 2 videos that I posted right after this big drop here on November 20th. So please go back and watch those videos. I gave you a play-by-play of the bullish put spreads and naked puts that I had on and exactly what I needed to do to protect those positions. How I legged out of my bullish put spreads, how I bought back my naked puts, how I used futures to hedge against the position, how I shorted the stocks. It's all in there, and those are really good lessons. It just teaches you that you can put these trades on. You can go with the flow. You can adjust your risk if the market does decline. If the unexpected starts to happen, then you have to take action. So please make sure to go back and watch those videos. I'm going to keep doing exactly what I've been doing. Let's take a look at last week's pick and see how that's fared. IREN. That was my pick. And we were selling the December 19th $40 puts, and I was able to get $2.10 for those Monday morning. So I was able to get the trade done, and that was right in here on December 1st. Well, December 2nd, it was like, geez, the stock just sold off. Now what? Well, the company did a secondary offering, and they're going to be using the proceeds to buy back some convertible notes. So the stock sold off, but look at how well the 100-day moving average was preserved. No worries, no issues. I'm going to buy the stock if I need to. I'm willing to take assignment. My net cost on this, if I'm assigned at $40, is actually going to be $38, $37.90 to be exact. And look where the stock is. It closed at $44.70. Those puts that I sold for $2.10 on Monday are now trading for $1.55. So they've already lost 25% of their value. And if this position expires, if these puts expire based on the margin that I'm putting up, which I'm taking half of the strike price, so half of $40, I'm keeping $20 in reserve. Now that's not the margin requirement. The margin requirement is actually much, much lower. But I'm going to use $20 because if I have to buy the stock, I can do so on Reg T by holding half of the strike price in reserve. So what's my return going to be on that? I'm going to make 10% in 3 weeks. That is a damn good return. So for any of you who are squawking at this going, I can't make any money doing this strategy, those are phenomenal returns. Where the heck else are you going to make 10% in 3 weeks? I'm going to be looking for a similar situation this week. I like IREN. The trade is working out, and I think the stock could actually continue to go higher. It's got good relative strength. Even if the FOMC reaction is negative, I feel that the stock is going to be able to hold this support. If it doesn't, I'm going to take assignment on the stock, and then I'm going to be selling some calls against it. Or I might just wait for the stock to rebound and then sell some shares of stock. Those are the types of trades that I'm going to be looking for. And I'm going to use a search that's going to help me find some stocks this week. A stock search, and this is all using Option Stalker Pro. By the way, this software is something that I designed exactly for this system. I'm going to show you how easy it is to find a good stock trade. So what do I want to find? Well, I've already mentioned that I'd like to find a stock that has high option implied volatility because that allows me to take advantage of accelerated time premium decay. It allows me to distance myself from the action. I am not gonzo, rah, bullish, go, market's gonna go higher. I gotta own me some calls. No, that's not the mode that we're in right now. We just want the market to tread water, maybe move a little bit higher. And that's what I'm expecting to happen into year end. I'm gonna be looking for a stock that's in a compression. Why do I want a stock that's in a compression? Well, I don't want something that's run up a lot in the course of the last week because stocks that have run up a lot can pull back. Normally, I would like to have that kind of momentum. Right now, I don't want it because I'm seeing a lot of sector rotation. Well, what does that mean? That means one day it's hot, the next day it's not. Healthcare stocks are in go, run-up mode, and the next day they sell off. I don't want to deal with that kind of stuff, okay? I'm looking for something that's been stable, something that's sitting right above support so that I can sell this put premium below that support level because that support level should hold in the event that the market does decline. I know that there have been buyers there before and they're going to show up again. They're going to support that stock. I want to see a stock that's in a compression. I'd like to have high option implied volatilities. I've got a value of 0.7 or higher. I did have it at 0.5, and I had a lot of other candidates that came in, some pretty attractive ones, but I'd rather go with higher option implied volatilities if I can. I want to have option liquidity, decent option liquidity, and so I've got a rating of -3. Option Stalker Pro, I rate option liquidity. How tight is the bid-ask spread? What's the open interest? What's the volume? All of these things factor into option liquidity. Does it have weekly options? I've got a number of different variables that I evaluate to come up with this option liquidity rating. Anything that's around 0 or slightly below it is going to be just fine. Anything in the 4 to 5 range, as far as a rating, is going to be very liquid. Those are going to be your apples, and anything in the 10 range is going to be SPY. Really, really liquid options. I'd like the stock to be above the 200-day moving average. So I'm not looking for a dog here. I'm not looking for a stock that's been in a long-term downtrend. I want to at least have longer-term support intact. I'd like to have the 100-day moving average intact as well. I'd like to have the stock be above AVWAP-E. That's anchored to the last earnings announcement. So since it released earnings, the stock is above the average weighted price. Great. Well, these should be some pretty decent stocks that we take a look at. But I want to make sure that I can get some decent premium. So here are the candidates right here. I didn't have 50 stocks to click through. I had a list of about 6. So if you are a working professional, you're busy, you don't have a lot of time to devote to trading, this search engine is going to cut to the quick. It's going to help you find the best prospect. It's super easy to use. By the way, take the free trial. You can come in and use Option Stalker Pro. You can watch us trade in the chat room. We're going to be posting great trades all the time. I don't even ask you for a credit card. And you'll have access to a course that took me 3 years to write. If you're just learning how to trade, take the free trial. You don't have to sign up for anything. You're going to learn so much. Let's take a look at these stocks. I'm going to take a look at CIFR. It's one that I liked, and you can see how it's been able to find support, and it's coming into play right around that 100-day moving average. Yeah, I like this stock. I think this could be actually a decent play, but that 100-day moving average is just a little bit too far away, so I'm not going to get a lot of credit selling below it, at least not the best credit. I'm going to take a look at HUT. This is going to be your pick of the week. I like the fact that the stock, yes, it has sold off a couple of times with the market. You can see the long red candles. And yes, it does pull back with the market. You'll see this long red candle right in here. You can see how the stock has been making higher lows. You can see how this candle bounced off the 100-day moving average. I'd like to stay below that 100-day moving average, which is at $34.50. So that means that if I sell the $35 put, I'm going to be long below the 100-day moving average at about $34. So let's see if those options are there for me. The option chain, I've got HUT loaded. We're going to take a look at the December 19th expiration. So this is 2 weeks away. 2 little weeks. Okay. Take a look at the $35 puts. They closed on Friday, 84 cents bid, offered at $1.22. I'm going to try and get $1 for them. I think that's very reasonable. And who knows, the stock could pull back just a little bit. Now, here's what you don't want to do. Tick, tick, tick. Time premium decay is eating away at these options. They've only got 2 weeks of life. If you can't get the trade done Monday, Tuesday at latest, do not do the trade. Okay, because that would mean that the stock is probably pulling back pretty hard. We want it to be right about where it is now on AVWAP-E. Maybe it could pull back to AVWAP-E, which is about 41.12. Okay, so it could pull back $1 from where it closed Friday. We're fine with that. That'll help us get our $1 credit. I do not want to see this stock pulling back Wednesday, Thursday, Friday after the FOMC statement and pulling back and taking out these lows here, and then having people ask me, Should I still do the trade right now? No, the freaking stock has pulled back $4. We're closer to option expiration. Time premium decay should already be working in our favor. No, I don't want to do the trade then. I want to do the trade Monday. I want to do the trade Tuesday. That's when you need to get this done. Those are your marching orders. What do I want to see out of the stock? I'd like to see this support level right here hold. So this is the low from the long red candle and the open of this green candle in here. I'd like to see that support hold. If it fails, am I going to lose my mind? No, because I've got support at the 100-day moving average. Yes, I'd like to see that support hold. And I'd also like to see this low hold right in here, which that may not even be tested. It's down at 31.57. I'm not expecting that to be tested. Stock is making higher lows right now. I just need to get through the FOMC statement in this week. What happens after that? Now, all of a sudden, time premium decay is really going to be working in my favor. And if the stock is somewhere around $40 or so going into the last week before expiration, it's so easy to manage, okay? Because these premiums just keep getting whittled away at every single day. We need a market dip here, okay? Very important. So what am I expecting the market to do next week? What do I want to see? What don't I want to see? We need a dip. Okay, and I'm not talking about this trade. Okay, so I'm not talking about the HUT options that we're selling. We're going to do that Monday. Okay, market pulls back, we'll deal with it. We'll take assignment on the stock if we need to. But for other positions, and the reason that I'm passive right now is because we've got a market that has shown us that yes, the dips are more frequent. The dips are more severe. We are making marginal new highs. We are not blowing through the high. If we were, that's bullish. That's really bullish. Like in here, this is all great stuff. So you get a little bit of a dip, blam, you're running right through that and you're making a substantial new high. Dip, blam, we get back to the high and we run right through it. That is aggressive buying. We are not seeing that now. The trend is tiring. That means that we can't be very aggressive on the long side. It means that call buying is out of the question unless you get a really deep pullback and it lasts a very short amount of time. And most of these pullbacks, when they have reached their climax like this, even this, you had an opportunity in here to maybe buy some calls for a few days, and then you get your pop, you get your bounce, out, sell it, done, gone, I'm out of here. I'm not looking for sustained moves. This is also a good point to sell your puts. So until I get this dip, until I get this pullback, this is where my odds are going to be the highest. So I don't trade the same way every single day, all the time, because conditions are changing and you need to know where your opportunity lies. And right now, your opportunity lies when you get dips and when the market finds support. And you don't have to buy calls. You can buy stock. You can sell puts because the option implied volatilities are going to go way up. When I did the video on November 22nd, right in here this Friday, after that big drop, I was selling put premium as much as I could. I had a number of trades that I put on. Even after this big decline, I realized that we're going to get a bounce. This was an opportunity. I had to adjust my risk here, and here I'm putting more risk on and I'm selling way down in here. Okay, this is a great opportunity for me. In a week's period of time, whoosh, those premiums evaporated. Anybody that sat on their hands Friday morning, and I told all my members this, you've got to take action now. It was 2 hours into trading Friday morning. If you wait for the bounce, you will miss your opportunity because those option implied volatilities are going to get crushed instantly. And the market makers aren't going to want to buy them from you. You're a seller of premium. They're going to back way off of that because they don't want to be buying puts when the market's going up. They don't want to be buying puts when the option implied volatilities are jacked. They're going to be there momentarily. So you have to act decisively when you get these pullbacks. What pullback would I be more inclined to get aggressive with? What pullback would I be more passive with? If you get a leak lower like this, so consistent selling pressure, then you have to be a little bit more patient and you have to wait for that support to form. If you get a one and done like this, some kind of Trump announcement where the market falls down, this is going to reverse itself pretty dang quickly. So you can act on a solo candle like this. Here you had 2 candles, so you can act in here. You don't want to see nice, orderly, progressive price action lower because that is a sign of persistent selling pressure. We just want a whoosh, flush out a bunch of stop orders, set that low, rally off of it. One and done, very, very quick. Then you can actually be more aggressive with that. So that's kind of how things are setting up right now. This is a very difficult time of year to trade because volume starts to dry up and you start to see a gradual float higher. The intraday price action this week was just abysmal. It was awful. Here's what most of the week looked like. Look at this. This is what most of the week was like. So if you're a day trader, this is really tough stuff. I mean, it's long candles one way, reversal the other way. You can't make heads or tails out of this. There's nothing trending. It's just very difficult as a day trader to make money. The best thing that you can do is look for sector rotation. When you get a hot sector, for instance, Thursday we had the quantum computing stocks. When you get a dip like this, you can buy the quantum computing stocks in here. And then you're going to get a bounce off of that market low and you'll be able to take gains on them. I'll just give you an example. RGTI, I know, was one that we traded and that looked really good. And you can see how it lifted off. This is yesterday's price action. So when you find these stocks and they do that, then you're going to have a decent opportunity. You're looking for big volume. There's your big volume right there. And nice, steady, orderly price action. The stock was in favor this day. When you get that market support, you can buy the stock in here and then ride it higher, knowing that you've got a strong stock and a market tailwind. The next day, this stock could be garbage because this is just sector rotation. One day it's hot, one day it's cold. So don't take these overnight thinking that you're going to get sustained movement this time of year. Not going to happen. So let's see if we get that sell the news on the FOMC statement. Monday and Tuesday, I think we're going to get a nice little float higher. Wednesday, I'd be super cautious. I don't have much exposure. I won't have much exposure. I want that market dip after the FOMC statement. If I don't get it, I'm not going to do anything. I'm not going to force my hand under crappy market conditions. I'm going to be waiting for that dip because I know that's where my odds are. Thanks so much for watching. Please subscribe to my YouTube channel. Leave your comments. Give it a like. We will see you next week. See how we trade live every day and take our 14-day free trial. I won't even ask you for a credit card. Dive into the action and trade alongside of us. Your downside is that you get some great trade ideas. Your upside is unlimited because you'll learn the skills that you need to be profitable. Check out OneOption.com and see for yourself.